Russell Price, deposit rates continue to fall, and right now you can get a 12-month CD for about 0.5%. 4 years ago it was about 4%. Where are we going on this? Are things going to start to turn around soon?
Well, I don't know about soon, but I think over probably in the second half of the year and into 2012, I do think the deposit rate should start to increase a little bit, just as market rates should creep higher, so long as the economy continues, the recovery continues, and we start to see the economy start to re-accelerate a little bit as we move out of the soft patch that we've seen just recently. So I think that over the longer term, deposit rates should start to improve, and I think the many Americans that do rely on fixed income in their portfolio, I think that's very important to them, and I think that will benefit those individuals.
So you said that's over the longer term. So should consumers be going after these long-term CDs at current rates, or would you advise them to stick around and wait for things to start to turn around?
I think that there would be some ability to look at a shorter term rates over the intermediate term. You're really not getting paid a whole lot today to go that far out into the maturity spectrum. So I think that it might do well just to sit tight for now in the short-term debt.
Okay, and finally on the loan side, that's where the good news is for consumers anyway. Loan rates continue to fall, especially on the mortgage side, and that certainly spurred some refinance activity last month. Are consumers responding with more loan activity, and just as importantly, are banks showing more willingness to lend?
Well, consumers seem to be going further out with loans on the credit side. Not so much in the residential mortgage, but into the revolving credit side with credit cards and automobile loans. And banks are more willing to lend when it comes to the revolving credit. There's still a reluctance, I think, on the mortgage side of the business. We've simply shifted from excessively easy money in mortgages. Unfortunately, now we're an ultra-conservative tone when it comes to mortgage lending. So I think that that's going to take some additional time. Bank credit standards when it comes to commercial and industrial loans have certainly eased. We've seen that, and we've seen loan growth there, but on the residential side it's just continuing to constrain. Last year, consumers paid down their credit card debt by $42 billion. This year we're seeing credit card debt, and that also includes other revolving debt such as automobile loans and student loans. We're seeing that start to grow again. So that switch from a negative pay down of credit to an expansion of credit should help the economy somewhat in 2011 and allow us to continue to recover.